Welcome to Retirement in a Nutshell, and this training video on how to enter loan and liability information for a client. Select the Loans Liabilities menu item on the entry screen and click on New Loan Liability. To expedite the training process, I'm going to use an entry page I've already completed for my clients, Ben and Betty Boomer. They have two loans, a mortgage on their residence and an equity loan. Let's select the residence loan and open that up. There's a drop-down menu for the loan type. Select the type of loan from that list. Do not enter credit card liabilities if the client fully pays off the credit card balance every month. In that case, it is not really a loan, and it's just a way of paying bills, as you might with cash or a check. If the client carries a credit card balance and makes payments, then that should be entered as a credit card loan. There is also a category for extra cost item. That is used for out-of-pocket expenses that are temporary and will not continue for the life of the clients. An example would be out-of-pocket college costs that will go away when the student graduates. This is the type of item that clients sometimes forget to tell you about. It is money that is not available for everyday living expenses right now. If not entered, this will result in the program calculating higher current living expenses than actually exists, and with inflation, create larger projected shortfalls in future years. So if your plan shows large shortfalls in the future, you should ask the client if they have any temporary extra cost items they haven't disclosed. College savings investment accounts are not normally entered at all, since they are not an asset used to generate retirement income for the clients. However, the contributions to an education account or paying for education costs out of current income are temporary extra cost items that should be entered and accounted for here. If you or your clients feel the need to enter college savings accounts, they can be entered on the investment screen and not here. The investments training video explains how you should enter them there. For the liability name, enter a description of the loan or item. If there is a current balance on the loan, enter the amount and it will be reflected in the balance sheet. Enter the monthly payment amount excluding any impound amount for property taxes and insurance, since the mortgage will go away someday, but the taxes and insurance won't. Enter the start year and end year for the loan. If there are revolving loans like credit cards that do not have a definite start and end year, enter the current year as the start year, and then use the button called Loan Length Calculator to see how long it will take to pay off the loan at the current interest rate being charged. The Loan Length Calculator allows you to enter two interest rates to compare how they would affect the length of the loan. If the loan payments or amount of the extra cost items are not the same each year, you can select the drop-down menu for the payment growth factor to enter the percentage the payment will increase each year. This might apply more to extra cost items like temporary health care payments that will increase over time than to loan payments that are typically flat. That concludes the training for entering loan and liability information for a client. If you still have questions, please look in the frequently asked questions list or call our toll-free number and we'll be happy to help you. Thank you for using Retirement in a Nutshell.